The 2026 global market is defined by inflation, supply chain bottlenecks, and severe geopolitical tension. Analysts across the board are bracing for a slowdown, but this animated bar chart shows a complete outlier. In the first quarter, Alliance Global Group posted a 6% upward spike, generating 7.8 billion pesos in normalized net income. The architect of this holding company is tycoon Dr. Andrew L. Tan, whose conglomerate controls major stakes in real estate, liquor, and integrated resorts. A first-quarter cash surge of this size prompts an immediate question. How did they pull this off, and where is that capital going next? Instead of hoarding cash to ride out the macroeconomic storm, Alliance Global is deploying it. They are executing a series of aggressive, contrarian capital bets across their 4 main subsidiaries to insulate their empire from future shocks. The first major capital deployment happens here. Property developer Megaworld has increased its 2026 capital expenditure to 65 billion pesos. A portion of this budget is funding a partnership with Samsung to build AI-powered homes. They are shifting away from basic residential units to integrate premium, unified tech ecosystems directly into their properties. Looking at this map of the Philippines, we can see Megaworld's geographic shift. They are dropping pins on Ilocos Norte, Cagayan de Oro, and Batangas. Securing large land banks outside of Metro Manila requires a massive logistical footprint, with active construction sites ramping up to meet the new township demands. Megaworld is actively moving its capital away from highly saturated metropolitan markets to capture higher margins in tech-enabled provincial zones. The second play comes from Travelers International. They are committing $700 million to physical resort expansion. They are avoiding the capital-intensive high-roller VIP mega casinos of Entertainment City. Instead, they are building smaller, boutique regional properties. These specific investments are targeted at existing tourist hubs, specifically Mactan in Cebu and Boracay. While regional competitors heavily invest in online gaming, Alliance Global is betting on right-sized physical tourism that remains insulated from digital regulatory crackdowns. Next is Emperador, the conglomerate's global spirits arm. They have earmarked 2.4 billion pesos, directing more than half of it entirely toward the global whiskey market. High-margin rare and aged whiskey categories are currently in a cyclical downturn, yet Emperador is expanding production infrastructure across the United Kingdom and Spain, ignoring the immediate geopolitical noise. The capital is funding new maturation sites to age premium stock. They are physically building up inventory. By hoarding premium inventory while the market is soft, Emperador is positioning itself to capture massive margins when the global luxury spirit cycle inevitably rebounds. The final strategic move involves Golden Arches Development Corporation, the operator of McDonald's Philippines. They recently deconsolidated from the parent company's balance sheet to improve margin structures. Now they are piloting a partnership with Shell Energy to transition their high-energy demand stores to 100% renewable power. Operating a quick-service restaurant leaves you vulnerable to commodity and utility inflation. Securing renewable energy certificates locks in predictable electricity pricing as they aggressively target a 1,000-store footprint by 2028. This shift to renewable energy operates as a strict financial hedge against volatile utility costs, protecting the company's long-term profitability. AI integrated real estate, regional physical casinos, premium global whiskey reserves, and a renewable energy pivot for their fast food chain. Yet, looking at the market data, there is a massive disconnect. Despite record income and self-funded expansion, Alliance Global stock trades at a deep conglomerate discount. This bar chart visualizes the gap. AGI's price-to-earnings ratio sits at just 3.7 times, completely dwarfed by the sector average of 12.2. Expanding the chart, underlying metrics reveal a price-to-book ratio of 0.2, alongside a price-to-sales ratio of 0.4. With the data on the table, you have to weigh the aggressive capital deployment against the compressed valuation. Is this stock a buy, a hold, or a sell for a 2026 portfolio? Alliance Global presents a rapidly expanding empire priced like a failing business. The numbers are clear, but as always, do your own research before making a move.